Okay, folks, welcome to Market Wrap for the 9th of January. All right, as usual, let's kick it off with the VIX. Again, we had the S&P 500. It was up today. We'll come back to this chart in a moment. We have 1, 2, 3, 4, 5, 6 consecutive up days. The VIX has had four consecutive up days. This is a weekly chart. That's why I'm only seeing one bar here. But we are at the highs of the week. So investors continue to buy up put options. Long story short, they're hedging their positions. Daily chart. So on a daily basis, we have, again, 4 consecutive up days. We cleared 10. We closed above it. That was resistance. It should now act as support. Higher lows on Ultimate Oscillator. And we have been following through with higher highs. So I speak about divergences quite often, and this is one unfolding in front of your eyes right now. Now, on a quarterly chart, and I had somebody take issue with me for using a quarterly chart for the VIX. I'm not sure why, but on a quarterly basis, we have a massive cup with handle formation on the stochastics, and we are very close to a breakout point. We remain in a trading range on RSI. Note how we've been at historic lows on the VIX for the second half of 17 into 18. But take note that while we put in lower lows, RSI never confirmed the move lower, nor did the stochastics. So you're seeing a lot of bottoming action here at this level. The last time you saw this type of price action and support level building at these levels was back here in 2006 into 2007. We know what happened back then. I'm not predicting that now. I'm just saying this is like a coiled spring. The 10-year yield. Weekly chart. We're really breaking out this week. We knew this was coming. The charts have been implying it. We are now seeing follow through. And the markets may be beginning to feel the pressure as noted by the price action today. I'm going to go over those charts in a moment. This is a beautiful chart. The dollar. The dollar broke above resistance, that secondary resistance level. We talked about it last night. We pulled back off the highs of the day. This is the UUP, the Dollar Bull ETF. Volume rose today, second consecutive day above average volume. So a bit concerning, yes. Intraday chart, let's go with the hourly. Okay, so let's take a look and see how we might open up tomorrow. We are in a bull flag formation on an hourly basis. We were giving way late in the afternoon, which is why we added to the NUGT position, besides the fact that it bounced off of historical support. But we did see buyers bid the shares of the UUP back up into the close, and they did so on volume. So one of two things is going to happen here. Either we break out of this bull flag formation, or we pull back and fill this gap, retest the prior breakout point, and we'll see if that holds. But the dollar is a bit of a concern. Back to the daily chart. So if the dollar continues to rally, you're going to have stiff resistance right up here at 24.20. Oil services, they pulled back today after putting in a new daily high. So this is a perfect instance of where, had you played the momentum trade here and bought on the new daily high, you would have gotten hurt today. I think that we're setting up for a pullback here on energy. That's what we want. That'll give us our opportunity to get long of the sector. I did not want to chase it. The Dow Transports. This is not good price action. We did move higher and we closed higher in the day. The problem is that we closed well off the highs. This is a hollow filled candlestick. Not a good thing. Volume was strong, but what that tells me is that you had a lot of sellers move in and take the shares down late in the day. I'm sure if we drill down to let's go with a 5-minute chart. All right, so here's our gap up. We traded sideways. The breakout failed, and we are now beginning to break down on this 5-minute chart. It's very volatile, not truly indicative of what might happen tomorrow given the volatility. You want to rely far more on your daily charts or a 4-hour chart. All right, so the Dow Jones Industrial Average daily chart, we moved higher. We closed off the highs of the day. So we're seeing wicks form. That's a sign of profit taking. The last time we saw that was back here, and we had a couple of down days. Again, I'm not calling for a crash in the market or anything like that. We're due for a pullback, especially with RSI as overbought as it is on the Dow Jones. And remember what I just talked about on the VIX. We're like a coiled spring, and we're seeing a divergence. You're seeing traders get ready for some surprising news as we head into earnings. They're not selling their shares, but they are certainly putting on some insurance. The S&P 500, very similar to the transports. Almost identical topping action. And it's not good. So again, let's drill down 5-minute chart. Not a pretty close. Left shoulder, head, right shoulder. We broke the neckline into the close. So a warning flag is on the track here, folks, for, look at this volume, wow. Warning flag on the track for these major averages. The Russell 2000 failed to break out. A bearish key reversal on the day. Volume very light, so nothing to write home about here. The banks, I wanted to buy them today, and I'm very, very happy that we used our discipline of buying in the final hour of trade because they sold off the highs of the day. And what I was looking at FAS in particular. Let's bring that up. You can see on a daily basis that really pulled back off the highs of the day. And on an intraday chart, look at how we stretched that Bollinger Band at the open. So I couldn't go buying it. I needed to see how it would close on the day. And thank goodness that we did. That's the discipline. Had we bought up here on emotion or up here on the new daily high, you know, you wouldn't be feeling good right now. You'd be disappointed. Not so much of the fact that you are down on the trade, but that you didn't respect your discipline, and that is to buy in the final hour of trade. And for those new members, you'll note I send out alerts in the final hour of trade normally. Sometimes I don't, but for the most part I do, because as I always like to say, what matters is not where a stock trades intraday or intra-week. What matters is where it closes and how it closes. If it closes at the high of the day, good stuff, bullish stuff. Expect a continuation follow through. I wouldn't expect that tomorrow with the FAS or the banks, or for that matter, even the S&P 500, because you saw profit takers move in. That doesn't mean we're crashing. It doesn't even necessarily mean that we are going to correct here sizably. It just means that we're going to pause. We're probably going to get a pullback, and then we'll see whether or not that pullback turns into something larger if we fail after a rally back to attempt to take out prior highs. If that fails, and then all of a sudden people start to get nervous. And we'll see how traders behave once their metal is tested on a failed breakout to new highs. And that's really what matters. The test is always at the top. USLV, 2 positions now. We broke down below support today. Yes, we held 1150. I'm not ready to buy yet. We added more to the NUGT trade. I'm satisfied with that right now. I need to see that dollar roll over and resume its downtrend, even for me to add more NUGT right now, because NUGT on a daily basis, yes, it held support, but it also broke down below a key support level, and we can't ignore that. So if we break down below today's lows, we will be stopping out of some of our position. And we'll look to re-enter when conditions are more favorable. And note how I didn't say at a lower price. That is not what matters. We want to focus on behaviors, focusing in on the proper trade setups that provide us good opportunity with the lowest amount of risk possible. Now, many years ago, when I began trading, I would have been, by the end of the day, kicking myself for not having the wisdom to buy at the support level. And after a while, after you get more experience, you know that that's not necessarily the wise move to make, not with the size position that we're carrying right now. So what I was happy to see was that we did rally off of this lower band of support. We closed well off the lows of the day, and we did close above this support level here, the lows of December the 28th. And from a higher level view, which is what you always want to keep in mind, remember why you're in the trade. Weekly chart. We pulled back to retest this key support level. And if it holds, it's a great event. If it doesn't, that's a different story. That's not a good event. 2-hour chart. All right, so the 2-hour chart, intraday view, I'm still not satisfied with it yet. I think that we will continue to see some backing and filling here. I love the reversal bar here. I love the fact that we consolidated and held the support level at, let's call it 30.86. But I simply hate this bearish key reversal in the final 2-hour period of trade. So what this tells us is that we have sellers right here. Overhead supply. So would I add more right now? No, I'm satisfied with our position. A quick look at emerging markets. With the dollar rallying, it's going to be difficult for emerging markets to continue to press higher, especially since they become somewhat extended. Volume rose. So you saw some distribution here. I would avoid at current, in the short term, the emerging markets. That doesn't mean that on a pullback, and an orderly pullback at that, with down days with declining down volume bars, that we wouldn't look to open up a position. I'm dying to do it, but not at extended levels. Remember, it's all about the risk versus reward. You have your MACD histogram losing momentum. Ovis, we're going to continue to watch this. We're seeing some bottoming action here at $1.10. Volume dropped off today. So you had some institutional distribution the past several days, and that distribution is beginning to drop off some. And given the volume, the light volume of this stock, it doesn't even make sense to take a look at the intraday charts. It's just so volatile. I'd rather stick with the daily view. EYES weekly chart, the high level view. We are retesting the breakout point. Daily chart, I was not happy with the close today. While we didn't break down below this support level here, we did flash a bearish key reversal. So what that implies to me is that we're going to see a continuation pullback on EYES. Now, we had a stop point at 1.84. We may lower that as long as we remain above this support level here in blue. It's a consolidation. So we'll remain long, but we will be looking to stop out if this support level fails, and we'll book our profits. We're going to leave off with the chart of the semiconductor sector, because we flashed a bearish key reversal today and a bearish engulfing of yesterday's move. Beware the semis. I think they may be putting in a lower high. Volume was below average. We have earnings coming out soon, fast and furious. Not so much this week, but beginning next week, you'll get the big money center banks. The following week, the regional banks, and some tech thrown in here and there. But this is not a pretty setup for the semiconductor sector. Let's keep an eye potentially on the short side here, but not quite yet. And that's it for tonight, folks. Everybody have a great evening. We'll do member stock chart requests tomorrow morning as usual. Have a great evening and a profitable trading day tomorrow. Be well.